Hello and welcome to the FOMC preview video ahead of Wednesday's release of the FOMC Minutes, due at 7 PM London, 1 o'clock in Chicago. Now, just to quickly recap what we saw from the FOMC decisions that precede these minutes, that was on the 31st of July. Now, they maintained the pace of bond purchases at 85 billion in MBS and Treasuries per month. However, some marginal changes. So we saw Bullard no longer dissenting. Previously, he'd been concerned about low inflation, but the FOMC now on his side and supportive of the same view, so no longer needing to dissent. And also we saw a very slight tweak in terms of the assessment of economic activity by the Fed, so now seeing a modest pickup in pace as opposed to a moderate before. So that's sort of supportive of the more hawkish views on the FOMC. However, we're not expecting any major changes from the minutes this time round. Markets currently tapering in, or factoring in and pricing in of tapering around September, so any sort of discussion of time frame and scale will be keenly followed. Now, any sort of more dovish than expected minutes will likely see the most aggressive price swings. As we've already mentioned, we are pricing in September, so pushing back of that expectation, likely to see a large unwind of these positions. But what to look out for will be any discussion as well, whether Bernanke will conduct meetings every single time there's a decision. At the moment, that's just quarterly, and also whether they will have discussed a certain scale of reduction, whether that'll be 5-10 billion. But then there are points to look out for. One final note worth bearing in mind, we have Jackson Hole at the end of the week, so it could slightly be overshadowed despite the fact Bernanke's not there. That'll be held by Yellen, who was one of the frontrunners for the Fed chairmanship. And also, as the Fed remain data dependent, a lot of focus will be paid on further employment reports and subcomponents. But for the time being, that's enough from me. Hope you enjoyed the FOMC Minutes and good luck.